Today, I will sign a series of historic executive orders. National emergency at our southern border. America will be a manufacturing nation once again. Drill, baby, drill. For rapid approvals of new energy infrastructure. The strongest military the world has ever seen. We will tariff and tax foreign countries and the world capital of artificial intelligence and crypto.
Today we're going to identify how you can make money in this new Trump administration. By analyzing the new executive orders, policies, and tariff, we can uncover huge profit opportunities. And first things first, I'm not a financial advisor, and this is not a financial advice. We're going to be mentioning a couple of companies in this webinar, but you should not, and I will repeat this, you should not invest your money into these companies before doing your own research. The purpose of this webinar is to provide the framework so you can easily identify opportunities in this new Trump administration. This webinar is courtesy of Inflection Investments. It is an investment community that specializes in event-driven strategies. We identify and analyze inflection events, which in essence are catalyst events that moving forward completely alters the performance of companies, which it uncovers huge investment opportunities. By executing this strategy, the inflation investment portfolio increased by 155.2% in 2024, almost doubling the best performing hedge fund in 2024. So, is the US election an inflection event? And the answer is absolutely, because there are a set of changes that completely alter the market dynamics. Changes such as where are the government dollars going to flow to? What programs and projects are going to be incentivized? What geopolitical relationships are going to be developed and broken down? All of this marks a before and after inflection point in the history map. Just to put it into example, the first day of his administration, President Trump signed 25 executive orders. We're not going to go through every single one of these executive orders, but there are going to be a couple we're going to highlight moving forward in this webinar. Policies I want to highlight are number one, border security and immigration, number two, national energy emergency, drill baby drill, and America First trade. And regarding tariff, we got a 25% tariff on Mexico, 25% tariff on Canada, 10% tariff on China, a tentative high levels of taxes, tariff, and sanctions on Russia. Remember that these tariffs haven't been imposed yet. At least the Mexico and Canada tariff are expected to be imposed on February 1st. But remember, there is a risk, and I mention risk because some of the trades I'm going to mention are related to this. And the risk is that they never get imposed at the end. For example, you got a 25% tariff on Colombia that was averted because at the end, they permitted to accept the deported immigrants back to Colombia. Remember, all of these, there are a lot of negotiation tactics. And now, let's jump straight to the gold. Let's go for the red meat, which are the stock trades that you can make a lot of money from in this Trump administration. And let's start with the detention centers. Trump has been very outspoken and unapologetic about his policy of deporting millions and millions of illegal immigrants. And this is actually a policy that highly benefits detention centers. Just to put one number into the air, the total amount of jail beds in the United States is around 2,171,000. Out of those, 87% of them are occupied, which means the total available beds in the United States is 280,000. Only 280,000 available prison beds. There are more than 11 million illegal immigrants in the United States, which means if they deported only 5% of those, they will already exceed the total capacity of available prison beds in the United States. And for that reason, the US Customs and Border Protection have dedicated a large portion of their budget to expand the capabilities of their detention centers and detention beds. Actually, if you go to the budget of the Department of Homeland Security for 2025, you will see that this is a priority. They have dedicated a budget of $25.9 billion for the Customs and Border Protection and the U.S. Immigration and Customs Enforcement. They also created a fund called the Southwest Border Contingency Fund, which includes $2 billion of funds to sustain the immigration detention beds and the increased demand and operations of the detention centers. Actually, if you go to the section dedicated for the detention beds, you will find out that there is a dedicated budget of $415 million for detention beds and $225 million for transportation and removal increase. because all the logistics and operations of moving the illegal immigrants around and deporting them is very expensive. What company actually benefits from all of this? That will be Core Civic, ticker symbol CXW. Core Civic is the largest private owner of real estate utilized by government agencies, and they manage 15.3 million square feet of real estate used by the government. They operate 43 prisons and jails throughout the United States. You can see it right here on the map. And they have a total capacity of approximately 65,000 beds. They offer correction management services, community corrections, health services within their corrections, and even transportation services. They have an occupancy rate of 75.2% at the moment, and with the increased demand of the detention centers due to the increase of deportation activities, you can bet that the occupancy rate will increase from 75 all the way north, which will make more money to Core Civic and make it more valuable. And thus, you have an investment opportunity right here. At the same time, they have a shares repurchase program authorized for a repurchase of $350 million dollars of their shares, which they have only repurchased $4 million dollars of their common stock so far. Another company that operates very similarly to Core Civic is the GEO Group, ticker symbol GEO. They also own and lease this type of facilities, and they can also experience a benefit from this demand. If we go back to the US Customs and Border Protection budget, you can find out a couple of items such as this one right here. There we go. It's an incident driven video recording system with a dedicated budget of $30.5 million dollars to purchase 3,600 additional body worn cameras, 100 vehicle mounted cameras, 200 in vessel routers, 17,700 holster automatic activation units, and 7,500 vehicle automatic activation units. What is the number one supplier for the Customs and Border Protection Department that supply this type of equipment? That will be Axon Enterprise. They design and manufacture less lethal weapons such as body-worn cameras, in-car video system, and cloud-based software solutions for law enforcement and military. They have been experiencing a lot of demand of all of their products, and the revenue has increased every quarter by 30 to 32%. Now, one important thing to mention is that this is a company that they sell $544 million dollars every quarter, which means if they win the contract of 30.5 million, they are awarded the contract entirely. This won't make a huge notch to their revenue, which means the price movement it can experience due to this specific event cannot be as aggressive as we usually look for. But it's important to know about this company since there's going to be a lot of demand for this type of equipment. Axon Enterprise, ticker symbol AXON. Another key area for the Department of Homeland Security will be surveillance. And there is one specific company called Amentum Holdings, ticker symbol AMTM. They provide cybersecurity training and aerial mapping technologies for national security. As well, they test, train, and operate for missile defense systems. They are experiencing an aggressive growth in the revenue. Their last quarter, the revenue grew by 188.6% year over year, and they reached $4.24 billion dollars in revenue for the quarter. As well, they're hitting profitability. Their guidance for their earnings per share in 2025 is $2 to $2.2, when the earnings per share of last year, 2024, was negative $0.9. Moreover, they're trading at a very attractive valuation. Their forward price to sales is 0.14, when their comparable companies are trading at 1.62. Their forward price to earnings is 10.3, when their comparable companies are trading at 23.76, essentially at half the valuation which their comparable companies are trading. As well, they're going to experience a massive revenue growth. Their CEO said that their revenue, their guidance for 2025 will be between $13.8 billion dollars to $14.2 billion, dollars, essentially a 76% year over year growth on their revenue. Let's shift gears to drill, baby, drill. Now, there are a couple of frameworks of how you can trade this thematic and a couple of things you should avoid. For example, the capital intensive operations of oil exploration, the oil price fluctuations, and the geopolitical juggling. Instead, you need to play smart just like Rockefeller did, finding the way to certainly profit from an increase of oil production. And this will be by investing into pick and shovels. Pick and shovels are the companies that provide the equipment, the services, and everything that's required to sustain that increased demand in production. And that is what we're going to explore here. There are two oil pick and shovel companies I would like to cover. The first one is Nabors Industries, ticker symbol NBR. They operate one of the largest land drilling fleets globally, providing contract drilling services to oil and gas exploration companies, meaning that the oil and gas exploration companies are the clients of Nabors Industries. The more these oil and gas exploration companies produce, the more money Nabors Industries make. And with the national energy emergency that Trump just declared, he wants to ramp up the oil production throughout the United States, benefiting Nabors Industries. They operate 68 rigs, and they also develop and sell advanced drilling technologies, including automated drilling systems and top drives. As well, they are trading at a attractive valuation with an EV/EBITDA of 4.16, when their comparable companies are trading at 6.22, which means a 33% discount, and a price to sales of zero point 0.2, while their comparable companies are trading at a 1.49 price to sales ratio, meaning a 86% discount to its comparable companies. The second company I would like to cover here will be National Oil Well Varco, also known as NOV. NOV, ticker symbol NOV, design and manufacture and sells drilling rigs and related equipment. Look at their website. We power industries that power the world. I love that. You know how can that be translated to? Pick and shovel. NOV offers drilling rigs, completion tools, and production equipment directly to oil and gas operators. They also provide rental services of certain equipment types to reduce upfront costs for clients. The company reported a net income of 993 million, significantly up from 155 million in the same quarter last year. At the same time, it is trading at a very attractive valuation once again with a PE ratio of 5.87 when the comparable companies are trading at 11.30, effectively a discount of 48% and a price to sales ratio of 0.65% when your comparable companies are trading at 1.49%. 1.49x, which is a 56% discount. Okay, guys, bear with me. We're almost finished. I want to briefly touch on this company. And actually, I already invested into this company, and currently I'm up 52%. The reason I invested into this company is because Donald Trump mentioned that he wants the US government and insurance companies to fully subsidize IVF treatments. IVF stands for in vitro fertilization. And there is only one publicly listed company that's a pure play in IVF treatment. That company is Progeny, ticker symbol PGNY. They offer comprehensive fertility solutions that include clinical support, emotional guidance, and financial assistance for individuals and couples seeking to conceive. This is the only company listed in the stock market that specializes in this topic. And if it is true that this treatment is going to be fully subsidized, you're going to see an increase in demand for this treatment because there will be no more financial burden that is stopping women from taking this treatment. And for that reason, I invested into Progeny. Last but not least, the good old tariff. And I want us to focus on the Mexico tariff because actually we already covered the ripple effects of the tariff imposed in other countries such as Canada and Russia, because their main exports to the United States are oil and gas. So if effectively there are tariff at the end, their volume of exports will decrease, which means that the United States will be forced to produce more oil and gas locally, which will benefit the oil and gas picking shovels we already covered in this webinar. So for that reason, we're going to focus on the Mexico tariff, which is a little different dynamic in this case. Mexico's main exports to the United States are vehicle and automotive parts and components, which represents $130 billion annually. That is 42.5% of the US import supply of automotive parts. It represents almost half of that whole segment for the United States. The second biggest export of Mexico to the US is electrical machinery with 85 billion, and the next one will be nuclear reactors with 81 billion. A company that stands to benefit from this tariff is American Axle and Manufacturing Holdings, ticker symbol AXL. They are a leading supplier of driveline and metal forming products for the automotive industry. AXL has established long term contracts with major automotive manufacturers like General Motors, Ford, and Stellantis, which means if these other major manufacturers start producing more because these components and parts once imported from Mexico are no longer imported, they will benefit. When I say they, I mean the manufacturers because they will start producing more of this, and AXL will benefit from the big manufacturers. AXL operates over 80 manufacturing facilities across North America, Europe, and Asia. And to throw a wild card into the mix, AXL is trading at a steep discount with a price to sales ratio of 0.11 when their comps are trading at 0.99. That's an 88% discount and an EV EBITDA ratio of 4.07 when their comps are trading at 10.74, a 62% discount. And that will be all for today, guys. It's been a true pleasure. And remember, I am not a financial advisor. This is not a financial advice. Always do your own research before investing into companies. And you can find more trades like this and understand how we were able to identify these companies discussed on this webinar in our community, Inflection Investments. Here you can find the 6-step structure event-driven playbook, which is a course that will teach you how to identify inflection events, structure an event impact map, and identify drivers and decliners that will essentially make you a lot of money and a lot of other value included within the course. I hope that with this video you were able to develop the framework on how to identify profit opportunities in this new Trump administration. And if you want to identify more opportunities in different events that develop every single year, you can find it inside the community Inflection Investments. Thank you so much, guys. A true pleasure. See you inside.